Thursday, Face Fanatics. I'm Dale Pinkert. I'm your host here. I want to welcome our viewers from investing.com that are joining us. I have the gold up here. A lot of people know I've been looking for gold to trade to 1286. Been talking about this number for a while. Greg also talked about 1285 or so last week. So we have a three drive formation. It's trying to come out of here. At the minimum, I don't think I'd be short here. You know, maybe we get some type of reaction back to the major breakdown. And I just want to show you what can happen on return lines. So this is a return line. The trend line would be something like this. So when they don't hold, they do this. Just a little lesson here. See? So we had a return line here as well in the euro. Looks a lot more similar here on the daily. And then once we take it out, you have a throw under and an acceleration. So, you know, you want to date gold right now. I don't think you want to marry it yet, but there could be some type of scalp setting up here. So see that line, how it broke down? So we're going to be keeping an eye on this line. We take this out, we could accelerate all the way down towards 1240, which really standard technical analysis would say you had a range trade here, some type of rectangle of, you know, $60, which would measure 1240. A lot of the gold shares are trading like gold is 1240. So we'll see. I would look at the gold as scalping opportunity only. Give me a Y if you're with me. Hi, KT, how are you? We have a great interview today with Ross. He's a crypto trader. We'll find out how he ended up becoming a crypto trader, hear a little bit about his journey. I also want to mention that this is a good time to sign up for our service. You could take a trial. I don't know if it's premature, but there's a whisper in the wind that prices are going to go up and not marginally. And if you sign up before that happens, you're grandfathered in for as long as you want to be part of our trading family. And I also want to make clear that if you're unsatisfied with your broker solution that you have, that our sponsor, Forest Park FX, is a great resource for you to discover another place that might be more suitable for you to trade. Yes, I'm a fan of Amanda's, Nitish. Hi, Siavish. So that's a reason in itself. So she supports her child trading. So, you know, we have a lot of people in the private chat that are members that this is not a hobby. This is how they support their families, how they make a living. So that's a lot of new traders, that's their dream, to be able to trade for a living. So I've always believed in surrounding yourself with traders better than you, and you'll rise to that level. So the private chat is a great place for you to go ahead and do that. Okay, I'm looking at my Twitter. So that's gold right here, guys. And I know a lot of people are trying to bottom pick euro. They keep trying to bottom pick the euro, and we will get a low eventually. This is still a confirmed low on the 1 hour. Maybe we get some type of ABC. I won't be able to turn friendly position-wise in the euro unless we take out 120. And in the Dixie, the same line that came into play was down here from last week, and that was 92.20. Right, hit it like a champ, came right off it. We made new highs. We're trying to break out of a weekly trend line right here. This is weekly, okay? This is a wedge, and the dollar's trying to break out. So, you know, I'm a big believer in relative strength. Why try and bottom pick this when you have something like the Aussie that's way off the low? So euro could make a new low, and Aussie's way off its lows. recent lows, right? Blake talked about a potential right shoulder down here. It's not classic, it's a little deeper, but it does look like we could be setting up for a head and shoulders bottom. That would also be somewhat of a clue for a gold, copper, metal rally, Aussie tied pretty close to those commodity markets as well as China. So does everyone get the point? Instead of trying to bottom pick something that may or may not have bottomed already, that you're better off buying something that has bottomed and we're already on our already have a higher low. If we pull back here, it'll be the second higher low. Okay, so you always want to go with the relative strength. And we've been also talking about the gold silver ratio. I don't have a chart on it, but yesterday when gold recovered a bit, silver recovered quite a bit more. So if you want to play the long side, look at the difference in the looks here. Here's gold, here's silver. Silver is your relative strength leader. So if you want to get long precious metals, I think silver is going to lead it this time. The silver shares have given up very little on this break. They're almost back here. It's the opposite of what the gold shares are doing. So silver is your preferred long in there. Give me a Y if you're with me on that. And then I want to show you the yen, which the S&Ps really aren't responding much to it. But the yen, these return lines, once they break out, okay, so I had this, we had a little double top. I was skeptical of the double top because this high did not take out the stops here. I thought we might go a little deeper, maybe 108. And then we broke out over this wedge, right? Look what happened. Pulled right back to it, tested it here, bounced off it, tested it here. So yen diverging, but doing nothing wrong. But now at least we have a better guideline instead of having to wait for the yen to be back under 109 to know something's wrong with it. Now all we need are closes back under 110. So we'll see. I know a lot of people talking 1220. I've heard 1280. We'll see if we get there. So let's see. Is there anything else? Any questions on anything that I've brought up today? You don't have to agree with me. Vincent, log in, log out, come back in. And your volume, if anyone could help them out there. Any questions on any of the areas I covered here today? Yeah, started now. Okay, welcome to FACE, Vincent. The best FX webinar free or paid service on the net. And just to show you, you know, I'm just a warm up. Now I bring in the heavy hitters. You know, I'm leadoff man. I'm just trying to get on base. It is baseball season, right? So I gave you a few ideas to bunt. 1080, okay, thank you, Dan. Don't fade Dan Norberg. I've watched him trade for years. Guy's a pro. So also within our webinar, a lot of professional traders come in here. It's interesting because they don't need to be here. I'm curious, Dan and Tillin and Dennis Geekus, you guys are pros. You guys pull money out of the markets. Why do you come to FACE? Just curious. Any of you guys have an answer? You're lonely. That would be valid. Are you lonely? I'm lonely. I'm Mr. Lonely. I've got nobody to call on the phone. Okay, that's Dan's answer. All right. Well, I hope everyone's having a good week. No one should have been short the dollar. We've talked about this. The 92.20 being 92 being a very important point that was tested early in the week. Not many reversals. Dollar's been king dollar, Larry Kudlow, the Larry Kudlow king dollar for weeks now and really expressed itself this week. We'll see if we can get some type of third drive setting up here in the dollar as well. Here's a shorter term look. You have one, you have two, And this time, today, it's respecting the weekly trend line. So we could have a failing rally here. I can't chase the dollar here. Even if we made a new high, I believe we'd have divergence. But we poke through the weekly trend line here, shows up better on the daily, shows up even better on the weekly, and it's respecting it with a day to go in the week. The off number is all the way down here, 92.57. And the week, next week, it's right around there too, 92.55. So good chance that 92.55 comes into play sometime next week. Oh, okay, Ed. I don't know if the guys will mind, but I do run a group on Saturday called the Eagle's Nest. Okay, and we have a great education section right here. But if you want the one-on-one type of thing instead of a video or print, you could get a hold of me, djpinkert1@aol.com. Okay, that's it for me plugging me, and I'm bringing on the cleanup hitter of ForexAnalytix. He, I believe, is right-handed, can knock it out of the park, very flexible. I've watched Blake trade now for over a year and listened to his ideas. I've learned a lot from him and Steve and Grega and Andre, the whole team. So, try and find a better combination of talent in any one service in the FX industry. Let me know. I want to see it, because right now I don't believe it. And I just want to give you, since we are here and investing.com's with us, here's my definition of an FX investor. An FX investor is a day trader who turns into a scalper and then turns into a swing trader and then becomes a position trader and then finally becomes an investor because he's been wrong in the market and hoping that someday the position will recover. So that I know, because I've done it. I've done it, Blake.
Isn't it ultimately you become a religious trader when you start praying to God that things are going to turn around?
Well, you know what, Blake? You know me. I've tried everything. I've even put magnets on the screen trying to get the candle to move in my direction. So, how are you today, buddy?
I'm doing fine. When you talk about what's the driver right now in the market, it is truly the bond market. The bond market is what is completely moving the market at this point. Hold on really quick. Crap, I got hey, I picked the wrong screen, sorry. That is, but you can see the bond market at the bottom there. It's right here. That's 30-year, and then there's the 10-year. Hold on, let me grab
So did it take out the downside of that wedge that you were looking at for a while?
No, well, yes and no. Okay, so first and foremost, let's grab the where is the 10-year bond market? Yeah, okay, here's the 10-year. Just so you can see what happened with the ZN. So this trend line, remember, this is not perfect by any stretch of the means. We could be like that. So we're at the bottom of an ascending wedge, 161% extension, and you can see the bond market's actually finding a little bit of support. That means yields have actually found a top here, at least in Asian trade. Now we're still pretty close, so it doesn't mean anything just yet, at this point in time. But if you look at yields, okay, I posted this on Twitter late last night, late for me anyway. Yields have hit a double confluence of, you can see it here, and this is a Trading Views iteration of the yield chart. I mean, I can bring you over. Like this is a 1 minute yield, 10-year yield right here on Bloomberg, but I don't want to. I'm not going to mess up my charts and start expanding all those and everything, because I leave those as it is throughout the course of the day. But you can see, it gives you a pretty good indication that we had 161% extension of, this is the February to April move, okay? Came in right here, and that's 161% extension. And you can see the other 161% extension of the most recent leg lower earlier this month. We hit it overnight. So it's I like to call it a double confluence of 161% extensions, and that's basically where we're at now. You notice I got an alert set up over here if yields cross back below 305, because that's really what would tell me that the bond market is starting to bounce. Yeah, and the fact of the matter is, I don't know what's going to cause the pound to bounce. Adam from Movement Capital.
Yeah.
You remember him, right?
Yeah.
So I asked him last night on Twitter, because I was having a conversation with Bonskew, which was another gentleman that you had as a guest here on the Face webinar. You know who I'm talking about.
I do.
Okay.
I don't know. I'm running out of people, Blake. I don't know who I haven't had.
Well, I was talking about yields and how I tweeted this chart, and he goes, yeah, but it looks like a real bullish breakout. And I don't disagree.
Yeah, Mark Newton said that too. I saw a tweet by Newton.
Yeah, I don't disagree that we're not going higher, because I should say, let me rephrase that. I don't disagree that we're going higher. Okay, so but we're getting overbought, divergent, hit a major fib confluence. So I would expect us to stall, and if I had to imagine what yields are going to do, they'd probably do something like this, back to the breakout point before moving higher again. That's what I would imagine is going to happen. And so and if that's the case, then that would mean that the dollar yen would pull back, maybe to 110, maybe just below 110 or something of that nature. That's what I would think would happen. Now, does that mean it's going to happen? No, but again, I'm trying to figure out why yields are going to pull back. The market doesn't like the market at some point. I should say this: the market at some point, the stock market, is probably not going to like this rise in yields. Funding costs are starting to move higher, and liquidity is starting to tighten. So, at some point, I would think that the stock market finally sees this as, oh my God, it's not good. It's not good news. And if that happens to bonds, maybe rally as a result, we see the bond market, bounce a little bit, on some quote unquote risk aversion maybe, but the momentum is so strong, and it's so strong with the dollar yen, and that's what's driving the dollar yen higher. Now, the dollar yen is also approaching a pretty key resistance. And you can see this red circle here. I have it. I had it on a smaller chart. We have a 618 retracement of the highs in November of 2017 to the lows here, and then the 618 comes in at 110, basically 110.90, 110.85. Then the 161% extension of the last leg lower also comes in at the same price. Now, a lot of buying has been coming in the dollar yen when we broke above the 110 level, because that was the previous, what you just had pointed out was the double top. We went above we broke out this bullish wedge, broke above the 200-day moving average, and it was supported yesterday. It's supported again overnight. The dip, there was a dollar yen dip in Asian trade down to 110 and change, and then we bounced right back up. So there's definitely a lot of buying in the dollar yen coming through. The question is, are we going to find some resistance if yields, peak a little bit? So that is what I'm watching very carefully, is the dollar yen here at this 110.85, 111 area. How do we react around here? With yields looking like they're struggling just a bit. So I'm just kind of paying. Oh, my office is so loud. Hold on really quick. Okay. But that's what I'm looking at, and right now it's been very tough trading in the currency market, because for the last couple of days, unless you're long the dollar yen, there's very little to do. I mean, it's been a very challenging environment. It's like, you got the euro dollar. Well, and the euro's heavy, okay, and we know that, but the euro's not getting any bounce either. We hit the 127% extension of this last move higher yesterday, and we're holding it today. But I was looking for a move down to 117. 117 is a 38% retracement of the big move. Okay, so 38% retracement down here at 117, and it's also 161% extension of this move. So I've been hoping we were going to see the 117 level first, where I could start, like when I'm planning a trade, okay, and I'm trying to think about what I want to do. I want to buy the euro at 117 for a bounce, and I'd play, 117 back up to 118 basically. Short the dollar yen at 110.85, 110.90. Try to play that back down to 110 or maybe even a little bit lower, and and do something like that where I can coordinate a couple of different trades, because I know that the FX market is pivoting in a couple of 2-3 different pairs, like the pound. And just so you guys know this, the pound is at, from the post-Brexit lows, okay, post-Brexit lows, the 38% retracement comes in at 134.40. So again, the euro came down to 117. The pound got down to 134.40. The dollar yen got to 110.85. Then at that point in time, I might stick my head out a little bit and try to play a dollar reversal, at least for a day or two, but it's trying to get all these levels to coordinate and to line up at the same time. It's difficult, and they might not even do it. So, because the dollar yen's so close to this, 110.85, but the euro still 100 pips away from 117, and the pound is, the pound keeps finding buyers every time we dip down towards 134.50, 134.60, buyers come swooping in again. So, I'm assuming that we're going to reach all these levels, but the question, or the hard part is, Dale, is just trying to stay patient and waiting for these prices, because yesterday was really tough because there was nothing really to do, and there was no pullbacks to be found. The pullbacks are pretty minimal. I bought the dollar yen yesterday. I bought the dollar yen at 110.13 right here, and then I wussed out of it. I got out of it for basically flat, and then it, like, literally, I mean, and I know you guys have probably done this before. I bought it at 110.13 right here, and as soon as I got out, must have been like 3 or 4 minutes later, I mean, we rallied up to 110.30, and then I'm like, dang it, I missed it, and it, like, with it, like, I'm talking within minutes, and then it came back down again, dipped a little further, and I'm like, I'm not going to buy it down here again, maybe because maybe it breaks below 110, and then obviously it just started higher from there. So so it's frustrating when you get when these pullbacks are very minimal. It makes it hard. I as a trader, and I'm sure you guys are the same way, I have a hard time when it's a one-way market, because when it's a one-way market and the pullbacks are so minimal, it's hard to get in. It's hard to find a price to get in into the trend that you're trying to predominantly trade. And so, you know, what I'm hoping for is we just see some sort of dollar pullback here, you know, that allows for some better entries at better prices. You know, you were talking about the Aussie. Yeah, the Aussie, I mean, we have this inverted head and shoulder pattern. It isn't the prettiest, but I will tell you something that, you know, if the Aussie breaks above the 75, 65 level, it's probably going to squeeze. So we might see a little move higher, but you know, overall, I'm more bearish the Aussie than bullish the Aussie, because I know I know we have a big longer term bearish breakdown. So you know, I think this would be one of those situations where if the Aussie did break out, it wouldn't go as far as people would expect. You would think that on an inverted head and shoulder pattern, it'd play out to, you know, all the way about up here, you know, something like that. You know, because you go from head to neck to measure, you would think it'd go back up here, but I think that it would be, you know, any type of rally in the Aussie dollar would be cut short. Even if it did break out. So, and the Kiwi, man, this thing is super heavy. You know, there's, you know, I didn't short it last night. So you had to have been short like in Asia, you know, above 69 and a quarter. And I didn't get that opportunity, or I didn't take that opportunity because I was, you know, going to bed. So it's difficult, Dale. It's difficult trying to find, you know, trades, like I said, when it's a one-way market. Now, if for some reason, you know, the euro starts to show some sort of reversal, you have to imagine this is going to be really key up here around the 120.80 level. This is the 200-day moving average. This is a big breakout point where, you know, a lot of traders were long. You know, a lot of traders were getting long through the beginning of the year, you know, thinking that we're going to 130. I think UBS still has a, you know, target of 130. They haven't even changed their outlook yet. You know, so I think that there's going to be a lot of longs that try to get out of the market on any move, substantial bounce if we see it. But again, what's gonna create dollar selling at this point in time? You know, I don't know. I don't know what is on the horizon to do it, because if we do, like, let's say we get a little bit of risk off, you know, does the dollar respond positively or not? You know, I don't know. But anyway, maybe Steve's got some better ideas with some of these cross rates, because I'm going to pass everything over to Steve, as we have Philly Fed and unemployment claims coming up. Steve, are you here?
Yes, mate. Yes, mate, I am.
Oh, hey, Steve. How are you?
Hey, I'm good. I'm good. How have you been?
Good. Yeah. So we, you know, the key that I'm watching, Steve, is I'm watching the bond market. The bond market is, I'm not sure if it's peaked yet, but you know, near term. But we're showing some signs of potential bottoming in bonds, top in yields. But I don't know how that's going to translate to the FX market just yet. I think we got to wait to see how this day plays out.
Yeah, we have to see, because, you know, there are still in the medium to long term, there are still very serious upside targets to for example, if we have a look at yields, just this flag formation points to 3.36, and not to even discuss the inverted head and shoulders formation, this huge inverted head and shoulders formation, which points to a little bit higher than 4% yields. Obviously, nothing moves in a straight line, so yeah, we might get some pullbacks prior to that, but definitely yields look like they want to keep moving higher, and obviously the exact opposite having to do with bond prices. By the way, Gregor is going to be with us in a few minutes, so I'm going to go over a couple of things fast so we can give him enough time to show us, as he does at least once per week, you know, what he thinks, what his views are from an Elliott wave perspective. So I think it's going to be interesting to stick around. Coach, do we have an interview after that?
Yes, we do.
All right.
Okay.
Well, very good. And make sure that you talk about Forest Park FX. They're the reason why we can have this this free webinar for you guys every single day. So, and you know, Forex, they're a partner of ForexAnalytix. They're here to really guide you through and help you find the broker that will best suit your needs. So Steve will show you how to get a hold of them.
You can either do that
program. So
yeah, you can either go there from our homepage here. Do you want ForexAnalytix for free? Because as we've said, you know, they subsidize your subscription, or you can directly choose their investment program at the top options, and you know, you can find everything we want. There's a different link if you're a resident, and different one if you're not. But regardless, you can contact them through the site. There is a Skype. Here it is. There is a Skype link. There is also an email. And regardless, they're going to be very helpful to you, help you make the best choice, having to do with which broker you should choose, depending on your needs, your trading style, you know, your account size, etc. Trent and Justin are great guys, and they're always very helpful. And they're going to be with us at some point soon, right, Blake and
yes.
Dale?
Yeah, and speaking of which, I've got to bolt out. You guys have a great trading session, and yeah, we're going to make sure we have Trent or Justin, two of the principals there at Forest Park FX. We'll have them on, so they can tell you about what they do and how they can help you as individual traders. All right, guys, have a great trading day, and thank you all for joining us today. For those of you from investing.com.
Bye, mate. Talk to you.
Bye. Thanks,
Stelio, we had data, right?
Yeah, I can't. My just coming through now. Philly Fed big beat. Continued and initial jobless claims roughly in line. One was lower, one was higher. But Philly Fed
but very marginally from what I see. So no big deal. Yeah, Philly Fed is the big outlier here, having to do with expectations at least. So yeah, we have a 34.4.
New orders. If you look at the sub numbers, not just the headline, new orders was very big, like 40.6 from 18.4 last time. Employment higher, prices paid a little bit lower. Okay, I think overall it's a good number from Philly Fed.
Yeah, absolutely. So overall good US data, as you see, USD yen, not accidentally, obviously, at the highs of the day as we speak, approaching now the 61.8 of the last move lower. If you remember, I was quite clear when we were consolidating here in a triangle that I expected that this would get resolved to the upside. It was an obvious, triangle consolidation, but I do think that 61.8 here or a little bit higher, this 111.50 area have the potential to at least produce some type of a pullback. I would want to see what kind of a pullback that would be before I decide if I want to be looking for more strength or a resumption of the weakness that we had prior to that. So I do think we need to remain a little bit more patient to see what's the big game here. And as I said, obviously being long at lower levels was a smart thing to do, but being long at current levels, I think it's quite a dangerous proposition. At least if you're looking for a short-term trade, it might hit you in the face. Now, EUR/USD stalled yesterday. We mentioned that level. It stalled exactly at the 78.6 of the last move higher at 117.63. If you look at the bigger picture, I mean, from the 2017 low, I think Blake mentioned that the 38.2 is at 117.10. So that's another area of support. That. Hey, Grega.
Hello.
Welcome. Welcome to the party. How are you, mate?
Welcome to the club. I'm fine, thanks. Excellent.
Good. So, something. Let me pass you the screen and we can discuss things together, since you're not here every day as I am. So, I would like to give you as much time as possible, because I know that always people, want to ask you several things, and, you have a quite broad view yourself. So, and you need time to go through everything. There it is.
Let me just lock my office down because I have kids around. Just a second.
Okay.
I know the feeling.
Yeah, I know the feeling as well, actually.
Greg has a bunker in his house.
Nuclear bunker.
Yeah.
Yeah, you should know, Dale, that not even bunkers stop kids.
Can you hear Jason through your bunker saying "Mommy, Daddy, Mommy, Daddy" through the wall?
Yeah.
Stelios' dogs. We get to hear his dogs almost every day, and his beautiful little girls.
Indeed.
Blake's kids are, fine.
Yeah, they're grown up. There is no. Yeah, they're grown up. Okay, we can see your screen, by the way, Gregor.
Okay. So you were talking about the euro dollar, right?
Yeah, I was saying yesterday I was actually saying that the 78.6 of the last move higher at 117.63 might prove to be support, which that ended up being the case. But we also have the 38.2 from the 2017 lows, which also can prove a support. Yesterday I was also mentioning that ultimately there is a zone between 114.50, which was a major breakout level in out of a descending channel, and 115.50, which ultimately might be tested, in my opinion. The long-term like bull bear line is there. I mean, as long as Euro-USD trades above that 100 pip area or within it, I think there is still a chance that we're going to see higher prices. But if we do break down below that, it's going to look very ugly. I don't know what's your view on that.
Actually, yes. To be honest, this sell-off is definitely looking very aggressive and impulsive. So rather than trying to pick a bottom of wave 4, I think that we should really be focused on potential test of this support line connected from 2017 lows, and maybe even this wave 4 swing level. And as you know, when wave 4 pullback occurs, usually prices retraces back to this termination point. So actually this, as you said, could be a bull bear line right there around 1.1560, and so far there is room for another even 200 pip sell-off. If we take a look on the 4-hour chart, we have broken lower into wave 5. Either, as you know, last time when I was here, I highlighted 2 wave counts, if you remember.
Yes, a main one and alternative. Yeah.
Yes, that either we go, just let me level this. Either we go down for a wave C or for a wave 3. In both cases, we said that more weakness should be coming after a bounce. So this was a wave 4 bounce that we talked about last week. I think it was last week, right? And then
yes, it was exactly a week ago.
Yeah, so current sell-off is a 5th wave, but as I said, there is still room for even 200 pip sell-off, if not more. So for a bullish case, I'm just waiting what will happen here. So what would I have to see is an impulsive rise and break above this Elliott wave channel. So I connected waves 2 swing highs and waves 4 swing highs. So actually, if we take this trend line out, then I could aggressively once again turn bullish on the euro dollar. But at the moment, as it stands right now, I think that there is room for more weakness. On an hourly chart, I would be watching this resistance here at 1.1874, or a little bit lower. This swing high at 1855 could also be interesting for potential new leg to the downside if we consider that this current rise can be an ABC. Okay, so if we also project fib levels for wave C, now wave C is normally, or very usually, very often similar in distance compared to wave A, so this comes in as exactly the previous wave 4.
The previous wave 4, yeah.
Yeah, so hold this region, I think, can be very important. But if we're starting to breaking to the upside very aggressively, then as I said, I would be watching this trend line, resistance, and maybe a weekly close price could be very important this week. So if we get back above this channel, then I think that bulls could still have chance.
Yeah,
So
regardless, as I was saying yesterday, from what I understand, you agree that this is not the area anymore to be trying to buy the dollar in the short term. What I want to do is see the next move of weakness from the dollar, what kind of a nature, what kind of a structure it's going to have to determine if I actually want to use it to buy dollars, or we should be looking for more dollar weakness. That's what I was saying yesterday.
yes, exactly. So it's all about this, the personality of a next pullback or of a next rally.
Yeah, same with USD yen. I don't know if you have I know that you would definitely have a more specific view, but what do you think about USD yen? I also want to see what kind of a pullback we're going to get from there. What is your main theory now having to do with it?
On dollar yen, I would be watching this trendline resistance of this contracting range. So we are actually chopping around for this on this dollar yen since 2016. We haven't seen any significant moves. We are just moving to the upside now from the lower side of this trading range. So if that's going to be the case, we have to consider that the new swing to the downside should occur from the upper side of the range. So now we are approaching these quite important levels here, above or around 111 towards 112. So watch out for temporary resistance here and maybe pull back down for a wave E, but then in another free leg structure. So dollar yen is actually can be also forming here a wedge at the top here, up from this month lows. So actually this tells me that bulls are not so strong. Definitely are not if we compare current rise to the previous rise. Okay, we can see that this was
momentum seems to be slowing. Yeah.
Yes, exactly. So I would be careful here and be aware of a pullback. So it makes sense to euro dollar, right? Where we also
absolutely
we could see a pullback. So dollar yen, watch out for potential weakness. I think that stocks are also trading at critical zone here. If we take a look on the S&P 500, the S&P 500, I'm tracking actually both wave counts. This is still my primary count, which suggests that this big consolidation will continue and that we are now at the upper side of the range, especially because this free wave rise slowed down at some very important key levels here, where wave C was similar to wave A. So I would not be surprised to see lower prices, but at the same time, of course, I must have this bullish count on my eyes, where this breakout could actually lead us higher. But for the short term, I think that there is room for more weakness, because even this, which is bullish count, okay, so this one
should bring more downside, like an ABC at least.
Yes. So actually here we can see that breakout maybe occurred and we are going to see higher prices. But then you should be watching this, maybe this trend line to act as a support on a pullback. And we are now probably in this pullback. But pullbacks are made by free waves, right? So this for me is only first leg to the downside, wave B, so I'll be looking for more weakness. So even if we are in a new bullish trend on stocks, I would be aware of a potential pullback and would be watching for a support at this former wave 4. Now, former wave 4 support was here, but the starting point should also matter because fifth wave was extended. And normally when this happens, a free wave decline of a higher degree can stop at the starting point of a wave 4, which was here, and not ending point. But it's everything around this trend line. So as long as we are above this trend line after 3 waves down, watch out for a potential bounce. But for the short term, even bearish count suggests that we could see, based on this one, we could see more weakness. But on this one, obviously more aggressive one. So if that's going to be the case, I think that Japanese yen could still get even higher. I know the Japanese yen was actually moving to the upside quite aggressively, even when stocks were up. So I would not be surprised to see Japanese yen moving making some impulsive rises against other currencies if stocks will also turn to the downside.
Greg, we have a friend here, since you are currently viewing stocks, we have a friend here asking for the DAX. What is your view for the DAX?
DAX also, I'm tracking 2 counts, but again, both suggest that we could see a pullback. Now, primary count is still the case that we are in a flat formation, ABC to a new low, and now an extended 5-way rise for a wave C. But even if you think that this 5-way rise is start of a new bullish trend, you would still expect
a wave 1, you mean? Yeah, we would still expect
like a wave 1, yes. That's why I have this alternate count here, right? So alternate count, wave 1 top, alternate count, obviously low in place. But even in such case, you would expect and would love to see an ABC setback before you may want to look for opportunities within uptrend, right? So I think that stocks, US stocks, and also European markets are maybe now facing or testing some critical levels. So even Nikkei, if we take a look at Nikkei, I think I have it here.
And by the way, after you have a look at Nikkei, let's have a look at FTSE as well. FTSE is the only index that is actually about to reclaim, yeah, because it's obviously being assisted by extreme weakness in the pound. FTSE is about to reclaim the all-time highs.
Yes, actually, I think I have FTSE here. So what I see here is I leveled only a 3-wave decline. Now we are, as you said, facing these new highs. I don't have any bearish wave count here. This is clearly a bullish interpretation.
I agree. That's what I was saying as well. I'm looking for a pullback to buy. Yeah.
Yeah. This is what you want to see if we want to ride this market. So just jumping in here when we are close to new high, it could be just a spike higher for a wave 1, and then you see a pullback. So regarding dollar yen, sorry, not dollar yen, Nikkei, what I see is also a flat correction here for a wave B. We are now, I don't know if that was a real gap here, but it's definitely, it looks interesting here, right, for potential end of a wave B corrective rally. Now, if this is a real gap, you will have to, I should look at some other contracts as well. But normally those gaps play out very important role when it comes, once they are filled, it can react as a new shift in trend. So maybe we will see some kind of a bearish reaction here. And once again, this could go very nicely in line with dollar yen.
And keep in mind that from a basic technical analysis perspective, we are also getting very near, I mean, the 23,000 area is an area that has acted as resistance multiple times before we broke above it, acted also as support once on the way down. So I do think indeed that that's a critical area. If we get rejected from there, I want to see what kind of a move we're going to get lower, because to be honest, I'm also viewing the 22,000 area as a nice area of support. So if we pull back in a corrective fashion towards 22,000, I would probably be looking higher. But if we do break down from 22,000 with some momentum, then I think that your scenario that this is a flat correction and we might be headed initially quite a lot lower is a valid one.
Yes, and also I see that we are now at 61.8% as well of wave A, right?
Yes.
So this could be definitely very interesting zone. So what I have interesting, let me look. Also, we can take a look at some main crosses. Euro yen, for example. Now this is very clear structure. I think that we also talked about this one in the past. So actually, what we see is a completed rise here, flat correction for wave 2. So in such case, when you have a completed correction, the minimum expectation suggests a drop below this level right there, okay? And we haven't seen any break of these levels yet, so I think that this is still going to happen. Also, this was quite aggressive and impulsive decline, so I think that we are now in a corrective rally here, maybe even a sub-wave 2. So risk-reward trade for those is very nice, can be very nice here, because as you know, upcoming wave 3 of 3 is normally the sharpest wave in sequence, so it could be really really strong. Yeah. So I'm watching this one for myself as well. Also pound yen,
Yeah,
Yes.
that's what I want to say. I think pound yen is also still a very nice opportunity. It's holding an ascending an ascending trend line as well. You haven't drawn it there, but there is an ascending trend line that passes. Let me open my chart so I can give you dates, and because in my opinion, you know, that's quite critical. So if you connect from the 17th of April low, all the lows that are following that, you will see that there is 17th of April 2017, right? 2017.
And this is the trend line, probably.
Yes.
Okay. Yeah, so it's retesting now 1, 2, 3, 4 times.
Yeah, exactly.
If we consider the 4-hour outlook, clearly previously was only a three-wave rise. This was wave A, triangle in a wave B, wave C rise towards the upper side of this corrective channel. And since we turned to the downside quite aggressively and broke through this trendline support, I think that we really should be aware of more weakness, and this could be a really nice wave 4 actually now at 38.2 up to 50% retracement level compared to wave 3. Also, we are in the middle of this base channel line. So as you know, I use base channels a lot. Normally, when they are broken, if I repeat this, I was talking about this a lot, but I will still repeat it. So actually, base channel, you connect the highs of our starting point of this wave 1 and wave 2, you put a parallel trend line at the bottom of this wave 1, and when you see prices breaking or falling below this trendline support, this is indication that market
that it's an impulsive move. Yeah,
accelerating.
that's an impulsive move.
Yes, more extended wave, and normally that fits to be wave 3 of an impulse. And then in the next leg, when pullback occur, you will see that wave 4 may slow down either at the one of these trend lines. So lower trend line is the first resistance, then you have mid channel resistance, and then you have the upper. And as long as we are below the upper channel, the trend is officially bearish. Okay, but here was the opposite. You can see that we have seen a push to the upside, but didn't saw any aggressive breakout to the upside, right? Market rather turned to the downside and broke this trend line support. So in such case, this ABC was confirmed as finished, and we turned to the downside bearish.
We are on the same page. I'm in total agreement with you. I still have some exposure short euro yen, and I'm actually looking to be selling pound yen. I've said it as well. So I'm in total agreement with you. I hope it's not confirmation bias, but this is the way I view the market as well. I have two requests. People are asking me to ask you specifically about copper.
Okay. Let me take a look if I have it here.
Copper actually, you'll see, has a very, very interesting long-term consolidation. I mean, a slow drift, a slow choppy drift lower. It has been in some kind of an uptrend in some time now. I mean, multiple months, and usually it's like thrusting higher, consolidating, thrusting higher, consolidating. But this latest consolidation has already lasted for a large amount of time. So you know, I'm still viewing it as a possible consolidation that can break to the upside, but the fact that it has taken so long makes me troubles me somewhat.
Let me take a look. Now we should focus only on this rise clearly. Okay, so
it seems corrective so far.
If you would ask me at the end of December, I would probably say that we are topping out here. But since we are not moving much here, okay, I would say that this is wave 4, maybe even a triangle in a wave 4. So if I would label this,
now, in case people have noticed, you're looking at a weekly chart at the moment, right? So they don't get confused with what we're seeing on the screens.
yes. Actually, what I see now is pretty clean structure. And this is a running triangle probably unfolding.
Yeah, so from what I see, you agree with my interpretation. I'm still expecting a resumption to the upside. So I see that your Elliott wave interpretation tells you the same thing. For me, the critical level is 317, 318. That's a horizontal support resistance area. Also a descending trend line from the highs passes from there. So if I see a break above 318, I'll believe that this consolidation is over and we're actually resuming to the upside.
Yes, I would also, but I would wait maybe a little bit longer. Maybe we are still here in this wave D, right? So I would be bullish, like you said, but we have to hold these swing lows here from a wave A, just for case if maybe this triangle goes a little bit more complex and longer in time. I think that this consolidation should send us higher while we are above this level.
Yeah, I'm in total agreement.
If we fall below this support, then watch out for this trend line. This is the base channel line, the same one, the same interpretation as I showed you on pound yen earlier.
For me, the line in the sun having to do with remaining bullish is the 293, 295 area. I don't want to see that area being violated to the downside. I will be feeling very uncomfortable.
Yes, but still, even if we break this level, maybe this would be only indication that wave 4 has a different form rather than a triangle.
It might be, but still I wouldn't be feeling confident anymore about the upside, you know what I mean?
Yes, in such case you would wait probably a little bit more, yes.
Speaking of copper, I know that a lot of people got caught off guard when gold actually broke below. I'm not going to ask you about silver because it's clearly evident that silver is still holding within a long-term tight consolidation, but gold, having violated now like a confluence of supports at 1300, I'm seeing a lot of people turning bearish. I'm not convinced yet about the bearish case. Actually, I had said in this webinar that if we did see a daily close above 1355, I would be looking to buy it, but oppositely, I wouldn't be looking to sell a break below 1300 simply because my longer-term bias is that we're ultimately going to see a move higher. But what do you think about the break that we got below 1300? Do you think it's the beginning of something bigger, or it's just going to fake people out?
I think that we are at the major trend line support on gold. I will just go there in a second. Okay. So if we take a look on gold, I think this is probably the most important chart to me that matters because we are at this trend line support connected for 2016 lows, and since we are probably making a complex corrective rise from start of December, the start of 2017 actually, this should be made in 7 swings, okay, because the first part from January or December 2016 to September 2017 was made by 3 waves, but then we got only a 3-wave decline. I'll label this. Not
yeah, B was a triangle in this case.
Yes, could be, yes.
Yeah.
So actually this was only a temporary weakness. It was part of a complex correction, which means that correction is still in progress because we have higher highs and higher swing lows. And it looks like that now, once again, we have another 3-wave decline. And since whole recovery should be made by 7 swings,
there's one missing to the upside.
4, 5, 6, 7 is missing, yes. So it's actually a double zigzag that I'm tracking. First zigzag and then a second zigzag up from December again of 2017. Quite interesting. This was December swing low and this once again. And this was only wave X that connects first to a second zigzag. So we are now at this major trendline support. And also if I take a look on the smaller time frames, you will see that actually first leg to the downside, was made by only 3 waves, and this is corrective in nature. So if we take a look here,
and so which means that you expect the next leg lower to be a 5-wave one, like the one we're seeing here.
the next leg higher.
No, the lower one. I mean, you said that A was 3-wave.
This A, yes, was in 3 waves.
Yeah.
Then you have wave B, and now we have 5-wave fall.
5-wave C. Yeah.
And this 5-wave decline, this is clearly a flat correction, suggests that we should see a bounce. Even if I'm wrong, you would expect an ABC bounce minimum. And this, once again, could take us back to this wave 4 area.
So bottom line, you think that there is a very appealing reward to risk ratio here to try the long side, even if it proves to be just a little rebound, right?
Yes, and I would trade for myself as well on the long side if I would see 5-wave price, and if we would break above this 1302 level, then I think we could buy a pullback for wave B, maybe even wave 2. So in such case, both interpretations suggest that there will be room to make money on the upside. But the key is in this first leg, which should be, as I said, in 5 waves on smaller time frame charts.
Dale, do we have more time with Greg, or your guest is here? Dale?
Is on coffee.
Guest has been here from the beginning of our webinar, soaking in all our great content, like a lot of pros out there.
Okay. So sorry, we didn't manage to cover. We had more questions for you, Greg, but unfortunately, Dale has to start. Fortunately and unfortunately, Dale has to start his interview. So thank you very much.
I rely on you, Greg Horvat. You heard that in the interview, right?
Yes.
Yeah. So you don't let me down often. You're my Elliott guy. So thank you, Greg. And you made that call last week looking for this break in gold. Nice call.
Yeah, thanks.
Okay, so I have Ross here, and I'm interested in talking to Ross. Ross is a guy that really doesn't have an axe to grind, which means he's not selling anything. So Ross, I tried to do some due diligence on you, and you didn't have a website or anything. I'm making you the presenter now. Looking forward to hearing your voice and meeting you, and see your screen. Let me see if your mic's on. Okay, I'm unmuting you. I can't unmute you. I guess you have to unmute yourself, Ross. Can you help me, Steve? It says attendee is muted by an organizer, and it's not. Oh, there we go. Okay. Hi, Ross.
Hello, can you hear me?
I can.
Hi, can you hear me now? Brilliant. Yes. That's great. I was frantically pressing buttons and nothing was happening.
Just like the Verizon commercial. Can you hear me now?
I can. I've been able to hear the whole thing, so it's been very interesting to listen. Thank you.
Oh, great to have you as a guest in both ways, watching our analysis, and now it's your turn. Do you want to share your screen? There is a screen share option.
No, because I'm actually talking to you on an iPad, so I haven't really got anything to share, but okay, I'm just happy to talk about anything you want, really, and my various strategies that I use.
Okay, well then I'm going to show my screen.
Yeah.
And we could move from instrument to instrument. Why don't we start off, Ross, with how you got into the trading business? Tell us a little bit about
no worries.
Part of your journey.
Well, my background is in finance. If I was to fill out a census form and they asked me what my trade was, I'd say I was an accountant. That's what I trained as. But I moved into sort of just general finance, and I've always had an interest in economics and how economies work and everything else. And I really fell into Forex trading a little bit accidentally about 5 or 6 years ago when I I started to look at, I used to day trade certain shares, and I used to do quite well on it. And then one day, one of the shares that I used to day trade, which was Lloyds Bank here in the UK, the share price just massively changed one day, and I completely lost my focus on all the resistance and support points and everything. So I started to look around for something else, and I kind of picked up on the currencies. And there'd been a big crash in the value of the dollar after 2008, and I noticed that the dollar was making a comeback, and I just started to read up and research on it, and I came to the conclusion that Forex trading was a probably better bet on the day trading than the shares. So because there's just so much more analysis. Yeah.
Okay, so you're a day trader. My understanding was you've even made the shift from FX to crypto.
I do trade. I don't trade crypto. I've bought and held basically.
Oh,
so I don't
holding on for dear life.
Well, I bought Ether at $400, and it was looking really good at one point when it got up to about 1,000, and then it's kind of dropped back again now. So, but that's my my plan was to just, I'm holding it for a year, that and Litecoin, and then the plan is to see what it is with it after the year. I didn't expect it to go up 10,000% like it had done last year. But at the moment, I'm slightly down on the Litecoin, but I'm up on the Ether, so not doing too bad.
Okay, so let me ask you, who influenced you and what kind of things you look for? Usually, you know, a picture speaks 1,000 words, but try and give us a picture of some of the things that you look for in trading the markets. And do you have a view on this recent dollar rally? You think it's going to continue, or is this a beginning?
I do. My main strategy had always been to buy the dollar and sell other things against it. You know, the euro dollar has always been one of my core things to trade. And the last year has been a bit tricky for me because the dollar had generally been in an uptrend since I started Forex trading. So getting my head round the dollar being in a downtrend was a bit tricky at first. I suppose you could just turn your charts upside down and then it works. But it was just...
a friend used to joke with me when I was on the wrong side of the market. He said, Dale, why don't you just turn your charts upside down? I also could relate that, you know, the environment that you initially learn, I coach, you learn, and your early success, like mine was being bearish short gold from when they made it legal again in the US at 200, and it fell to 100. And, you know, I kind of fell in love with down as faster, and so I was always looking for things to short. But I finally embraced W.D. Gann's maxim. If you don't learn how to change your mind, you won't have any change left. So is it through, so how do you control the early programming of being a dollar bull in bear markets? Technically, is there a reason? Go ahead.
I started to shift my focus. I realized that the euro was becoming bullish. So I looked around for some, rather than, because I still struggle with the concept of the euro being the bullish against the dollar, I shifted to the euro Swiss, to the Swissy. You know, having watched the plunge a few years ago, I remembered a comment which was made by someone else who's on Twitter. I don't know if you know him. He's called Ben Williams, and he said to me that gaps always get filled. And obviously we had the gap from 120 down to sort of, you know, sub 100. And I began to look at that and realize that if I wanted to, because I'd never really traded it before, if the euro was going to be bullish, it might be better to be bullish on something other than the euro dollar. So that's why I picked the Swiss franc, and it's been very successful over the last couple of years. I tend to do the moving averages. That's my general way of trading. But at the same time, if something's in a bull run, provided you can pick the right points, then you've generally got yourself a good level of results for as long as that run lasts. And with the euro Swissy, it's been going on for probably the best part of a year now. So it's been, I knew it would, once it started moving up, I knew it was going to fill back up to 120. So I've taken it all the way up to 120. I'm out of it at the moment, and I'm just waiting to see what the next direction is going to be. Will it continue higher or will it drop back? So
What would tell you? What kind of tools do you use? I mean, is it simple supply, demand zone, support, resistance, trend work? What do you use?
Well, my three main ones are, I tend to use Stochastic, MACD. I do use moving averages as well, and then the other one is the Williams percentile. Those are my main ones. So if something gets down to like, I don't know, under 10 on the Stochastic or on the Williams percentile, I generally think this is now time to go either long or short on it. So I wait for extremes on the moving averages before I move.
And how do you manage risk with that kind of methodology?
Yeah, I mean, normally, depends on if I'm going with sentiment, I might often set a couple of 100 pips, you know, as a stop loss. But if I'm not quite so sure, if I'm kind of trying to, I don't try and pick bottoms, but I do look for extremes. But I generally would set a relatively tight one of about 40 then, 40 or 50. But occasionally I have, you know, looked at my stop loss and thought, let's just move it down a little bit further, and it's worked for me. So I tend to, it's kind of one of those things, I never really set it in stone, but I generally try and limit myself to maybe between 40 and 50 before I think maybe this isn't working.
Okay, well, depending upon what time frame, even the daily, would you say that the euro is reaching an extreme here, down from 124, 125 to
I think short term, yeah, one of the reasons I've cleared out of the euro dot, I had shorted it down from about 120 to about 118.50, and then it started to get oversold on all of the H4, H1, D1 and everything, so I've cleared out of it now, and I am expecting a pullback, you know, to go back up to the sort of top of the range on the either the stock or the Williams percentile. But at the moment it does seem to be, well, it was grinding lower earlier, but it seems to have recovered back to 1.18 now, so I think that might be a bit of a point, a resistance point for now, and we may get back up to about 1.1875, 19 before maybe we head down again. I do think the dollar is getting over its recent wobbles and is going to be charging back now. So
okay, and how about your native currency, cable?
The pound. Well, oh god. Well, I tend to not trade after Brexit. The pound just started going absolutely haywire, so I avoided it. I used to trade the euro to the pound, but again, it's just been a hard. There's been no clear trend for the pound in some respects, because after dropping to about 120, everybody said, "Oh, it's going to go to parity," and then of course it got to about 136, and I remember thinking this could be a good place to short it, and then it went up to 144.5, was it? And now it's headed straight back down again. Everyone was gambling on interest rate rises, and I've long said there's not going to be an IR rise for at least another year in this country. So if people are, you know, going to, I don't know, buy the rumor or whatever it is, they're going to be wrong. So they're not going to raise interest rates for the foreseeable future.
Okay, so can you tell us what your Twitter handle stands for? RDL Investments. What is
All
it?
right. Yeah, well, I basically trade for myself and my family to earn money. So it's basically just the first names of the three members of my family. Ross, that's me, Debbie, my wife, and Louis, my son. Okay.
All right, so you support yourself from your trading activity?
Yeah, pretty much. That and my other investments as well.
Okay.
I'm an investor in stocks and shares as well. So that's kind of, I don't know, 50% of my earnings, and the other 50% comes from Forex trading.
Okay, and do you teach people, or have people approached you, or why, if you're just doing this on your own, are you on social media? What's the purpose? Do you like to just share your ideas?
Yeah, it's really just sharing ideas and finding out what other people are up to. Being nosy, I suppose. That's how you learn, isn't it? So,
okay. Yeah, I call it intelligence gathering. Yeah, you call it.
Yeah, no.
You call it being nosy. So, you know, I used to only stick my nose in there so I could fade people, but it does help to. It's good sources, doesn't it?
It's been brilliant. There's a lot of people. I mean, I've got 2 or 3 people that I chat with quite regularly. You know, either through private message or just, you know, through the Twitter, and it's just been a real help. And sometimes, you know, when the market's not going great, and if you have a run where you make some losses, because it does happen, it's often good to see what other people are doing, because you either learn to change your strategy or you realize that maybe they're going through the same thing. So it's not always your fault, it's just the way the market's going. I had a bad January, and it was quite well, not reassuring, but it was comforting to know that I wasn't the only one who was having a bad January when the dollar was going into a bit of a tailspin.
Okay. Well, you know what? I have a recommendation and a suggestion for you, Ross.
Yeah.
Subscribe to ForexAnalytix and do your intelligence gathering here, and join us in Face. I see multiple compelling ideas every day that I think will increase your horizons. And we also have different methodologies here. You just heard Greg, he's our Elliott Wave guy. We have Andre, who does harmonics. Blake is, you know, very well known, respected in the industry, as well as Steve Volge. And then there's me, the broken clock that's right twice a day. So,
yeah.
I mean, I look around in our webinar. I know I'm supposed to be interviewing you, but I see a lot of people I've interviewed in here every day. There must be a good reason for it. So I appreciate you coming on, and next time perhaps you could do it on a laptop or something where we could see your setups and have an understanding. It's hard to do an interview and talk about prices just verbally. You know what I mean, buddy?
No, I appreciate that. I mean, I've not been on this before, so, you know, when you invited me on, I thought it was going to be one of these. So if you invite me on again, I'll share my screens and I'll prepare some charts for you and everything else. So yeah.
Okay, well that's a promise, and maybe you'll be part of our ForexAnalytix family by then. So really nice meeting you. I appreciate you taking time out of your week and your day to come and address us. And so the best way to follow Ross is at RDL Investments on Twitter, and check out Ross and his commentary on Twitter. And if you have some ideas,
I do post charts on there as well. Usually every few days. You know, what I'm trading and what my reasoning behind what I'm doing. So yeah, if people pick up on it, then they'll be more than happy.
Yeah, to know the whys, right? Because if you don't know why you're getting into a trade, you won't know where to get out of the trade. If the why is negated, you should say bye-bye. So again, thank you so much, Ross. Good hunting to you. I'm glad we met. And
indeed.
I will invite you back. It's a promise.
No worries. I'll get better prepared for you. So okay.
Okay. I appreciate it. Thank you.
Cheers, then.
Face. See you, Ross. Take care. Good hunting. Also, I want to thank all our investor.com viewers today, and also all our Face fanatics here. I do have a excellent interview scheduled for tomorrow. She's very well known. She has a column on Bloomberg. Danielle DiMartino, author of Fed Up. So we'll have a lot of Fed talk tomorrow. I'm looking forward to meeting and speaking to Danielle for the first time. Everyone enjoy the rest of their day. Let's see what the gold is doing. Like I said, silver outperforming the gold, but gold's trying to come out of the hole here. Here's your, Greg is looking for at least a pop. So we were talking about it down here. What's containing it is a 50-day on the 1 hour. So this was a nice scalp on a 3 drive. If you don't know what a 3 drive is, take a picture. Remember, everyone, don't just count your pips, count your blessings. See everyone tomorrow for TGIF. Good hunting. Adios.